Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, hope everybody had a good weekend. Sorry about Friday, I was traveling. Let's talk about the daily chart. There's not a truckload to talk about this morning. Here's the deal. You've got what could be best described as a little bit of a triangle since we made this spike high back on March the 6th. They come back in, they do a little bit down there in that 38.46, 38.50 area. They come up shallow here on Fed day, and then we've got all these moving averages here. Let me zoom in one. So here's your 200-day exponential. This is a continuation chart. 200-day exponential, 50-day, 9-day, 100-day, and the daily mid-band, the 20-day simple right there. And you've got price bisecting 3 to 5 of those every day. And the ranges are still pretty decent. So we got a 36 handle Globex range tonight. Until one side or the other wants to put a leg together. And that would be, at this point, the bulls converting 40.80 and trying to get up above 4,100 and go. Or the bears converting 38.50 and trying to take this down. What you are left with is a very wide range that could get battled over, into the summer. You've got you take the Fed out of the unknown column for now, put them in the known column. You have earnings coming up, that's fine. But as far as intraday price action and day-to-day price action is concerned, they are in a range that they want to fight over. On the hourly chart, and you can see it. I'm going to flip this to a front month in a minute, but here's your 50-day. You bumped your head on it on Wednesday. They take it down to weekly pivot on Friday. Before the open, they spend the rest of the day basically climbing. Hourly mid-band holds up here. Hourly mid-band was trying to be resistance. Rejected it here, rejected it here. They give it up. Get through the green line here, which is your daily mid-band, your 20-day simple from the daily chart, the 100-day and the 9-day. You end up closing above just about everything that you were trying to take out. You had all day to figure this out, and what you do is you turn it into support. So what happens? All right, weekly pivot hops up from 39.93 from 39.32. What do you do off of the Europe Open? You turn that into support too, along with the hourly mid-band. So there's a very slight advantage to the bulls for two reasons. Number one, you're above the daily mid-band. And the daily mid-band, the 20-day simple moving average, we've talked for a decade now about how whether we are living above or living below that line, you live above it, it is an issue, whether that's a stock, a derivative, whatever it is that wants to be a buy dips environment. Bought that dip, and it was doing it last week, versus something that wants to live below the daily mid-band, which is more of a sell rally environment. The bears need to put together a day today. Otherwise, as you get later in the week, there's a real risk of them losing tape control. And then, we get into next week, and then we're into April, and you got jobs on that Friday, and and we get into the Easter holiday. So two things jump out at me on this. Number one, the inability to convert the daily mid-band to resistance, which after the Fed last week and after the Fed reaction really should not have been much of a tall order for the bears to do a little bit of follow-through Thursday and Friday. They did none. We battled over it, right? We battled over it. But again, chance to take it out on the close, didn't do it. Chance to leave it sealed off, couldn't do it. You come back off of Europe Open, you don't even get there. You end up sealing off hourly mid, you seal off the weekly pivot. So what is this waiting for? Well, you're waiting for a higher high here if you're the bulls. Then you're going to have to deal with monthly pivot up at 40.78, and you're going to have to deal with that Fed reaction high up at 40.73.75. The first stop would be the pre-FOMC price, which in my infinite wisdom I did not move on this chart, but now I did. Magical, right? We bumped back up into the pre-FOMC price, 33.75, which was important today. It was important Thursday. The break of it after the Fed reaction, very important. First order of business for the bulls, you want to have a day? Convert 34. Even better, why don't you close above it? If you did that, opens up that monthly pivot. So the very short-term lay of the land, you got volume-weighted average price, 40.20. Proprietary moving average is sitting at 25.75. 5-minute mid is right around where price is now, right around 28. Again, the pre-FOMC is holding it in on the upside. Hourly mid-band is holding it in on the down, 40.34 versus 40.15. So 40.34 versus 40.15, that is your first smaller range that one side or the other is going to have to deal with off at the open. Convert 34, get back up into this reaction high, get back up into monthly pivot. Convert 15, you got to deal with the roundy at 4,000, which is always a thing. And then you got all this traffic down here. Weekly pivot, 9-day, 100-day. So many lines that the lines are like blurring. It's like you're putting together your primary colors in second grade. It's like, hey, what's this line and this line? And I'm a guy that doesn't have a lot of lines on his chart. Anyway, 100-day and the 20-day are down there in and around 39.78. So convert 15, open 78. Convert 34, open 40.78. So the playground is really, it's 100 handles today. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care. Trade them well. I'm back tomorrow. All right, be good or not. Talk to you.